Welcome to this video. In this video, I'm going to be performing a stock analysis of Richtech Robotics. If you like this video, please don't forget to leave a like and subscribe. Now, as you can see, they rose 32.35% today, and that is because, as you can see right here in the news, they have made a huge deal with a large retailer. And something you should note about this agreement is, as you can see right here, the agreement will automatically renew additional 12 months periods unless either party expresses its intention to not renew, which means that it's automatically going to renew, which means there's huge trust in each company, which is absolutely lovely. Now, if you know what kind of robots Richtech Robotics make, they make one like this called the MedBot, which I think is going to be huge. It can deliver drugs and medicines for nurses, so they can primarily focus on the patients. And of course, we have a huge nurse shortage in the entire world, so I think this is going to be crazy. They have this one called the Titan, which can deliver autopods, so you don't have to go into the warehouse and just make sure people are working the most optimal. You have this one called an Atom, which can be both a bartender or a barista, and this one called a Scorpion, which is primarily a bartender. Then you also have these called Dust E, which we both have for factories and warehouses. That's the Dust E MX, and then we have another one called Dust E, which is just for hotels, and I think that is also going to be a huge seller. Now, if you take a look at the stock recently, as you can see, it has absolutely exploded today. As you can see, all the way down here, all the way up here, which is absolutely crazy. And the RSI as well is quite crazy. We're up here in the oversold, no, not oversold, overbought area. You know what the RSI is? That is the relative strength index, which shows which way is a stock going. So between 70 and 50, it's going upwards in a steady trajectory. As you can see right here, it's in the upper channel, slowly going upwards. Is it above 70? As you can see here, it is rising rapidly. If it's between 50 and 30, on the other hand, it is falling slowly. If it's below 30, it is falling rapidly, as you can see right here, and then it's oversold. Now, something you should note about this company is it is very small. As you can see, the market cap is 472 million, which means you don't need that much volume to just either shoot it up or just absolutely tank it. Of course, which is something you should note about a small company like this. And of course, this isn't financial advice, and I have to say I do own quite a lot of Richtech Robotics myself because I do believe in this company. Now, the beta of this company is also quite high. As you can see, it is 1.84, which means it is almost 200% as volatile as the average index. As you can see, the earnings here are gray, and that's because there are other rules for smaller companies where they can wait to disclose how well it's going. Now, as you can see down here, annually, the earnings list is quite bumpy. As you can see, we went down here to the revenue. That is because, as you can see right here, robot service, that is them fixing the robots, which is nice to see that is so huge. Then robotic products, if I can speak, that is how many they're selling, and we want to see this rise because this is also going to rise with that, because of course the more robots they sell, the more robots they need to service. And then leasing is also quite nice. We want to see that as well, because this is like for smaller companies or maybe for events and stuff like that, and this is primarily going to be like the Atom and the Scorpion. Now, the overview in this stock is something you should note is they have very little debt. As you can see right here, 795k debt. That is absolutely nothing. That is what a big house in the US. Of course, it is absolutely nothing compared to the market cap of this company, and also they have 85 million in cash. Now, something that's interesting is it's a very high PS ratio, which is something we don't see very often. We often see a very high PE ratio, and I do like a higher PS ratio than a PE ratio because this is just the price to the sales ratio, and I do like to see that being quite well. Now, if we roll down here, and you can see down here to the seasonals from 2023, we have some years where they perform good, like the last year, up by 19%, and this year we're at one point, last year, we're down by 84%, and then just the later last year, we really recouped. As you can see, it was down by 55% by the end of the year. This year as well has been quite a bumpy ride. We started up by huge margins, up by 70%. Now we're just below minus 1.2%. Of course, let's hope that is going to increase upwards. Of course, that doesn't take into consideration we are a bit down in the post market, but this was down by about 3% earlier, so of course that is nice to see. Now, if you scroll down here to the analyst rating, as you can see here, we have 3 strong buys, and we're actually above the average, which is quite interesting to see. It wouldn't surprise me if by the end of the year this is about $4 or $5, but I have to say I do love this company quite a lot, and I'm gonna stick out to the end because I think this is gonna be a millionaire maker in the future. I love it so much. Now, we can't even see the annual estimates for the EPS, and that is because there's not enough analysts and they haven't guided that yet personally. And as you can see, they're estimating to sell more and more each quarter, but look, it is in these single-digit millions, which is something you should be worried about, not worry about, but worry of, because of course this means it's a very small company, which is why it is still such a small market cap. As you can see, 472 million, and there is only 57 employees. That was my analysis on Richtech Robotics. If you like this video, please don't forget to leave a like and subscribe.